Yes, it's true, as the thumbnail suggests, the spring real estate market in the GTA is officially over. I'm very sorry if you missed it. The timing of last week's rate hike just lines up perfectly with the slowdown we were already experiencing. I want to talk a little bit about some projections for rates going forward, as well as an interesting trend I'm seeing right across the GTA. That's from Toronto and Halton. Stay tuned because you're included again this week. Has to do with month over month change in sales reported, as well as new listings coming to market. So stay tuned for all of that and more. How's it going, everybody, and welcome back to the channel. It's me, Rob Marsiglio. I am a sales representative with Keller Williams Referred and Urban Realty, living out here in Durham region, helping the great people of Durham region and doing my best to bring you weekly content about what is happening with GTA real estate. And this week, like I said, we're going to talk a little bit more about rates, talk about why I think the spring market is over, and a little bit more right off the back. But first, let's start off with some words from CIBC's own Benjamin Tal.
I think there is a risk, and that will be a mistake, that they will raise again in July. I hope they will not. We are working very hard to convince them not to, but there is a risk that they will go another 25 basis points. Then the question is, when are you cutting? When are you cutting? The market was expecting the Bank of Canada to start cutting in the second half of this year. I'm not sure what the market was smoking back then, but it's not happening. It's not happening. The Bank of Canada and the Fed will not be cutting before 2024, maybe the first quarter of 2024.
So there you have it. Higher for longer is what I'm hearing from Benjamin Tal. This was filmed, I believe, before the last rate announcement, but I think it still rings true with what I am hearing. People are kind of baking in maybe another rate hike before the end of the year, and definitely no cuts for this year is what the market is saying. Not until early next year at the earliest. Like I said, I never want you to base your decision on going to buy a house, based on the fact that rate cuts are coming and you can refinance for cheaper. None of that stuff. We want to buy for the right reasons. We want to rent for the right reasons. Just some interesting perspective from somebody much smarter than I am about where rates may be going. And here we go. Our new favorite slide from the Montreal Stock Exchange shows exactly what Benjamin was talking about. 88% chance that by September 2023, so our next rate announcement happening in July, comes before September 2023, obviously, but thinking, another 25 basis points, chances are that, by early next year, 2024, we will be 25 basis points higher than we are right now. And then the market is projecting for rate cuts to start middle of 2024 into the end of 2024 at this time. And just like we talked about last week, what we're seeing right now isn't necessarily qualification issues for people. It is more so maybe a buyer sentiment, consumer sentiment check that we're seeing. Just a lot of negativity like we talked about last week. People worried about where rates may go. Everybody had their hopes up that this was a pause followed by some cuts, not a pause in rate hikes followed by more rate hikes or continuing this cycle. Something we'll just keep an eye on going forward. Now, I talked about an interesting trend that I am seeing that maybe highlights some of this buyer hesitation. It has to do across all 5 markets. We're going to look at detached homes in Toronto, Durham, York, Peel, and Halton. I'm going to show you a trend that we're seeing comparing the rate of sales change to the rate of new listings change. So every year in June, it's kind of the end of the spring market. We head into the summer, which is a little bit quieter. People out enjoying the time off school, enjoying the weather. And it's never a surprise to see the sales rate drop as well as the rate of new listings coming to market. We're used to seeing both of those things fall from May into June. Take Toronto, for example, on this chart here. You can see that the average drop in sales from May to June across all the years going back to 1996 when they started publishing their market watch data was 2.97%. We could bank on, seeing around a 3% drop in sales from May to June, and listings, which I think always kind of lead what is happening with sales, dropping off quicker. That's an indicator that we are heading into the lower, maybe active inventory months of the summer, less people interested in listing their homes, like I said, enjoying their days. And what we're seeing this year is a complete inverse of that, at least through 12 days. So through 12 days of May compared to 12 days of June, we are seeing sales actually slowing down quicker than listings. For only the second time going back to 1996, sales have dropped 31% month over month, whereas new listings have dropped 25.1%. Now, it's keeping it pretty tight in Toronto. It's telling me that sellers and maybe buyers are pausing at around the same time. Maybe the quicker slowdown than we're used to seeing, but maybe the spring into summer market, it'll kind of be a normal transition just because both things are slowing down relatively at the same rate. So when we get to the suburbs, that things get super interesting. As always, we will start off with Durham region, the home base. Got to show some love to the people out here. So in Durham, on average, we expect sales to drop 2.9% from May to June and listings around 12%. And you can see right now, sales have gone really off the rails, down almost a quarter, 23% through the first 12 days, whereas listings are only down about 2.9% through the first 12 days. So again, listings aren't slowing down as quickly as sales are. And what do we know about supply and demand? More supply coming for less demand means downward pressure on prices. It's even more exaggerated in places like York region. We're used to seeing a 4.22% drop in sales and a 12.6% drop in listings. We're actually seeing positive change month over month in the number of listings through 12 days. It's about flat, but it's actually up 0.2%. I think it represents about 5 more new listings through 12 days in June than we saw in May. But the buyers, whether that's as a result of this rate announcement last week, maybe some rate holds running out and people are requalifying at higher rates, maybe they can't requalify, that buyer pool has definitely contracted from May to June. In Peel region, it's almost a carbon copy of a story. We're up about 0.5% when it comes to the rate of listing change from May to June, but we've seen a 25.2% drop off in buyer activity across Peel region. And lastly, the one that I just really can't make any sense of. Halton region's been doing this for a while, and it's not as rare, it seems, for Halton region to see sales slow down more than new listings from May to June. You can see that going back, it's happened quite a few times. We can count them up here, but still, our month-over-month change in listings is positive, whereas sales are down 21.2% from May to June so far. Now, all these charts cover detached freehold markets in these areas. It's the detached segment that really drives the market. It leads the market up price point wise. It leads the market down price point wise. It's just the biggest volume of transactions you're going to see in any of these given regions. So when I see this disparity happening between what's happening with listings and what's happening with sales, it leads me to believe that the bigger we see that gap increase, the bigger we see that gap, the more of a headwind that is for home prices going forward. You know, if buyers fall right off a cliff, but sellers think I can catch the tail end of the spring market, that's a lot of inventory that'll just be sitting there. So, you know, one of a few things may happen. Yes, they may be forced to sell. So we're going to see prices come down because there's a lot more selection for buyers. We also could see a big increase in terminated listings. Maybe sellers still not happy with the prices they're getting, not quite in that place where they have to sell yet. So we might just see a lot of terminations, and then maybe we kick this can of price declines down the road until the fall, because as we know, if sales aren't happening, it's really hard for us to tell what is true value of a property in any given market. Real estate is interesting, unique in that way, in that you need sales to be happening to tell kind of what the market value is of a product at any given time. I'll wrap the video up by just sharing this slide one more time. I'm going to try and show this every single week. I want to just make a quick comment on this chart. It's a little slow to update because Trendly updates their sales reported by the actual sale date. And this is all confusing and maybe a little bit over your heads, but let me try to explain very quickly. The Toronto Regional Real Estate Board uses the date a sale was reported by a brokerage as the sold date for that property. So a property could sell on, let's say, June 6th, but it's not reported until June 9th. That sale would show up in a different week based on how Treb reports their sales in the Market Watch. Trendly, however, bases it off of that sold date. So even if you have a property that's being conditionally sold for a week's time, the sold date would be when it officially sold. So you may not see a sale reported for a week and a half later. So I just want to make that note that these sales in the later weeks will probably be a little bit depressed from where they'll end up. The further back you go, the more accurate the data is in terms of sales. But still, the pace of week 23, so that's kind of middle of June, is still lagging the sales from the week before, and prices continue their decline. We still haven't reached this $1.3 million mark in median sale price across freehold properties in the GTA, going back to the end of April, beginning of May. We're currently sitting at around 1.275 million. That is the median sale price for a freehold property across all of these markets. So like I said, sales were slowing down, prices were coming down already. We will keep our eyes forward to July to see what happens with this next rate increase. Do they kind of continue this pause again? I know a lot of people are thinking we can't just hike once and then go back into pause mode. People much smarter than me are projecting another hike. We will see if that really does come to fruition. And in the meantime, tune in each week. Check me out on Twitter. I'm posting all the charts there as well. And like I said, until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.